Welcome back. Well, markets in a cool spot, you will have to say, at this point in time. Nifty close to all-time highs, about to break 9,400. Sensex did break and set a new all-time high earlier today. So good going for the markets. At that point, let's get to one of the stocks that's been an outperformer, Blue Star. Posted a decent set of earnings in Q4 with no fireworks, but certainly the positives are outweighing the negatives. Margins supported definitely, especially from the unitary cooling products segment. Vir Advani, the managing director of Blue Star, has joined us to give us more perspective. Mr. Advani, can you first begin by telling us how business looks this summer, Tier 1, Tier 2 and the mid-cities? Is it better than what you saw in the previous year?
Hi, good morning. The summer looks good. I think the industry is poised to grow at about 20-25%, and at Blue Star we're also set to grow at about 30% in the summer season. So the summer does look good. I think we've got the right weather. We've got buying happening in Tier 1 and Tier 2 markets, and I think with this monsoon also expected to come in on time, it should be a good year ahead. Yes.
Rural, is there something spectacular you want to tell us about rural demand?
No, actually what happens is that in this season, we have more buying from Tier 1 and Tier 2. Okay. Rural demand will pick up post the agri crop season, so we should see that pick up in the second half of the year. So for now, it is very much Tier 1, Tier 2 buying that is driving our sales.
Okay. Mr. Advani, good morning. So looks like you have quite a bit of visibility. FY17 EPS was up 17% at nearly 13 rupees. FY18, can we expect another double-digit growth?
If I can just take a minute to explain the FY17 numbers to you, because we had in FY16 a Blue Star Infotech merger. Those numbers are actually embedded in the FY16 numbers. So if you just bear with me, in FY16 you have 210 crores of revenue from BSIL. We have 33 crores of EBITDA built into those numbers and 26 crores of PBT in the FY16 numbers. If you remove that and you do a like-to-like comparison of how we closed 17, I think you'll see that revenue has grown 22%, EBITDA again has grown 22%, and the PBT before exceptional has actually grown 34%. For the first time in several years, we've seen good growth in both segment 1 and segment 2. So our legacy project issues that we've had for several years in segment 1, we were able to close those out in FY16, so you're beginning to see more consistent numbers in FY17, and certainly going into FY18, we're feeling more confident about segment 1. Segment 2, which is our unitary products, you can see margins are holding while revenue has grown very strong 27% last year, and we're expecting that to also continue into FY18. So I think after several years, you'll see both segment 1 and segment 2 firing for the company. So we're feeling very optimistic going forward.
Okay, if you can give us a little more details on some of the new products that you've gotten into, the new segments like, water purifiers, water coolers, air purifiers. I have used some of your products like the water purifiers, and the response has been very good in the market as well. But what kind of growth in sales do you see from the new products?
Good, I'm glad you raised that. So we have 5 new categories. We have water purifiers that you talked about. That is our most significant new investment. We kicked off that business in October 16, and in this calendar year will be our first full season. As you know, the water purifier season starts just after the end of the air conditioner season. So we're geared up with a large portfolio of products. We've expanded our reach, we're spending money on advertising, and we anticipate that this year should be our first full year for that business. We're looking forward to competing in the market, and of course penetration levels growing rapidly in that category, just like air conditioners. Beyond water purifiers, we have a few other categories. We launched air coolers and we launched air purifiers, both in the last financial year. Air coolers have picked up well. We're expecting FY17 to be quite substantial for us, of course, off a small base. But there again, the market is growing quite well. Air purifiers, we launched just around demonetization time, and therefore we had a slow start, frankly. We launched it, but obviously people were not looking to buy at that time. Air purifiers sell more in the winter, so we'll again be ready ahead of the winter with a much wider portfolio of products in the air purifier category. We also have 2 new categories in our refrigeration business. We're now in healthcare refrigeration as well as in kitchen refrigeration. Kitchen refrigeration is for the QSR segment, and healthcare goes more into pharma distribution. So about 5 new categories of products, both in B2C and B2B, that you'll be seeing Blue Star participating in much more actively in FY18.
All right, Mr. Advani, thank you very much for that very detailed, outlining of the outlook for FY18. All the very best. Well, we are winding down on Bazaar with a bang, you will have to say, at least as far as the markets are concerned. All indices at all-time highs or very close to breaching them. Let's give you an important programming note on that note. Markets are at record territory. Have you missed the bus?